We achieved a significant enhancement in EBITDA margins, improving by 149 bps YOY and 854 bps on Q1Q, reaching 14.2% during the quarter. We are pleased to announce the successful commissioning of intermediate plant, which marks a significant step towards the backward integration of one of our key fungicides, which was previously imported. This achievement is a testament to our in-house indigenous R&D technology and aligns with the Government of India Atmanirbhar Bharat. By substituting imports with domestic manufacturing, we are not only enhancing our self-reliance but also contributing to the nation's economic growth. Furthermore, Dr. Kulappa appointed as additional director holder during the quarter. We are confident that his experience and expertise in chemistry and technology development will be valuable to our growth and continued success. Looking ahead to FY25, we aim to do capex of 110 crores, combining both IPL and SSL shell base. Furthermore, we are poised to grow by expanding our customer base and strengthening capabilities. We are committed to leveraging consistent research and development efforts, driving innovation. We are confident in navigating them with our robust pipeline of innovative products and increased market presence, ensuring we meet the evolving needs of our customers and maintain our competitive edge. Thanks. Now I will hand over the further presentation to Mr. D.K. Jain.
Thank you, sir. Good afternoon, ladies and gentlemen. I take the pleasure of welcoming you all for this Q1FY25 earnings conference call of India Pesticides. The first quarter of FY25 started on a positive note, with the overall demand growing on both year-on-year and sequential basis. Despite geopolitical tensions, supply chain challenges, and inflationary pressures, India Pesticide has continued to demonstrate strong growth. During the quarter, the company has delivered strong performance on the back of increase in our sales volume, driven by a favorable product mix. Our formulation sales have shown significant growth, while our technical sales are more or less steady, attributed to a slightly decrease in the exports and an increased internal consumption of technical materials for formulations. This dynamic underscores our focus on enhancing the formulation segment of our business. Moreover, our focus on adding new facilities, incorporating new product lines, and implementing process improvements and technology upgrades further strengthens our competitive position and supports future growth initiatives. In line with our long-term vision, we made a deliberate decision to strengthen our R&D capabilities and expand our formulation marketing team, leading to a rise in employee expenses. We believe these investments are crucial for fostering innovation and solidifying our market position. Additionally, we faced a significant rise in freight charges due to logistical challenges posed by the Red Sea situation. Despite these hurdles, we remain committed to optimizing our supply chain and mitigating cost impacts to sustain our growth trajectory. Now, moving on to some strategic development during the quarter, we have successfully commissioned our immediate plant and intermediate plant, a significant step towards the backward integration of one of our key fungicides, which was previously largely imported. Achieved more than 100% utilization of our formulation business by utilizing some of our technical facilities to meet the increased market demand. Capex of 50 crores for IPL and 65 crores for SSL, that is our subsidiary Shalvi Specialties, is planned for FY25, which will further strengthen the company's capabilities for the coming years. As we grow, our commitment towards bringing chemicals which can substitute and limit our dependence on imports remains steadfast. This is also one of the many initiatives that aligns to our company's vision of Make in India and Vocal for Local to support domestic growth. I extend my deepest gratitude to our dedicated team whose commitment and hard work have driven our success. I also want to express appreciation to our valued stakeholders for their continued support and trust in our vision. Looking ahead, we remain resolute in our pursuit of excellence, innovation, and sustainable growth. Together, let us embrace the opportunities that lie ahead and continue to make a positive impact in our industry and beyond. With this, I would like to pass on to Mr. S.P. Gupta to walk us through our Q1FY25 financial highlights. Mr. S.P. Gupta.
Thank you, sir. Good afternoon, ladies and gentlemen, and thank you for joining the India Pesticides Limited conference call to discuss Q1FY25 results. Taking you through the financial highlights for the quarter, total revenue for Q1FY25 was rupees 224 crore as compared to rupees 205 crore in Q1FY24, showing an increase of 9% on YOY basis and 72% on Q1Q basis. We registered quarterly EBITDA of rupees 32 crore with 15% EBITDA margin as compared to 13% EBITDA margin achieved in Q1FY24. Net profit for the quarter stood at rupees 19 crore, an increase of 25% on YOY. On geographical split, domestic market contributed 143 crore and international market 77 crore to our revenue. We are seeing signs of recovery in domestic market, primarily driven by good sowing of crop in Kharif season. On export front, recovery remains soft. However, volumes have started picking up. Technical and formulation sales for Q1FY25 is 142 crore and 78 crore respectively, as compared to Q1FY24 sales of 158 crore of technical sales and 43 crore of formulations. India Pesticides Limited has a strong balance sheet with the ability to generate good free cash flow. Company is planning to fund its capex plan with internal accruals. Our cash and cash equivalent at the end of Q1 was 140 crore. With this, we would be happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use headsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello.
Yes.
Good afternoon, sir. Sir, if you could give some more details on the export front, more on the technical side. You have mentioned that formulations have done well in Q1. So on the export front, on the technical side, what is the scenario like? How have the prices moved in last 3-4 months? And what is the situation on inventory destocking?
Sir, export front also there has been a gradual increase in the demand, and this quarter also we have had a reasonable export volume. We expected around in the last quarter we said that we would have export orders of about 100 crores, and we supplied material this quarter of 78 crores, and still we have export orders of about 100 crores still pending. So they are slowly picking up, and prices are slightly settled at a slightly lower level, but they are settling now. And we feel that in the coming quarters it should still improve upon the overall export volume.
So how much the prices will be down currently in last 6-8 months?
What is down, sir? I could not understand.
How much are our product prices down as compared to 6 months back?
The prices are settling at a slightly lower level than earlier one. Because what is happening, because of China destocking situation, the prices of technical products have been reducing continuously in the last 1 year.
On an average, it will be a decline of 12 to 15%.
So, but now they are slowly settling. Now there is not so much of price reduction of technical materials from China also, because we feel that the over distribution from China may be getting over.
So, and sir, with regards to the capex which has been done till today, including the subsidiary one, which started in Q4 '24. So, at the current prices, what kind of revenues we can generate on standalone basis, and what kind of revenues we can do in the subsidiary?
We have already projected a revenue growth of 15 to 20% for this year, and subsidiary operations, they are stabilizing, so they will not be contributing much this year in revenue.
And last question, sir, with regards to our margins. So yes, our margins have moved up to almost around 13-14%. But prior to the situation worsening globally, we were doing EBITDA margins of 25-26%, and then we did about 21% margins in the previous year. So in what time frame do you feel we can go back to margins of at least 20-22%?
We are expecting price recovery from Q3 onwards. So as soon as price recovery happens in international market, we can go to say 18 to 20% EBITDA margin.
Sure. Thank you, sir. Thanks so much.
Thank you.
Thank you. Ladies and gentlemen, just a reminder, anyone who wishes to ask a question may press star and 1 on their touchtone telephone now. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Sir, good afternoon. Just harping on the margin side, we had almost more than 30% in March 22 or so, and thereafter it has been going down, and it is now in the almost close to 10% or so. So we know the reasons, like there were increase in the fuel cost, then the logistics went up, then there was destocking, drop in the demand and all that. But other than that, now is there any other reasons which has contributed to this downfall?
See, our volumes are more or less intact. This is because of price decline across the globe. It was basically due to higher channel inventory in international market and adverse weather. Prices have declined significantly. In some molecules, they have declined by more than 40%, 30% in last 2.5 years. So mostly it was a price decline led margin decline.
Okay, so now that everything is coming back to a stable level, still you are guiding as 18 to 20% margin only. Just wanted to find out, is it because the new product that you are launching are not completely backward integrated, or any other reasons?
The margin which were achieved in 21-22, they are being rationalized. The margins exceeding 25% cannot be sustainable seeing the current situation. So this has rationalized slightly. So the earlier margin will be we cannot foresee in near future, considering the scarcity has been created worldwide and demand pattern.
So you mean to say if the demand comes back and the prices starts going up, even then 25% margin would be a difficult task?
In near future, it is very difficult, but we cannot say for next year how the things pan out.
Okay, fair enough. So second thing I want to know, these capacity plans and the capacities that we have, what is the maximum practically possible to utilize this capacity? Is it 90%, or what is the possible utilization?
Yes. In generally, 75 to 80% utilization is considered good, but if demands come, we can go up to 90% also.
Matlab, if the demand is there, can we go up to 100% also?
Yes, we can go if there is a demand.
Sir, most of our process are batch, no, not continuous.
Yes.
So many of the processes are batch operations, and we can go up to 100% capacity utilization if there is sufficient demand of the product. Normally what happens, every product has a seasonal effect is there slightly. So some months during the year, we have to slow down the production.
Okay. So keeping that in mind, now what is the current capacity utilization of our two plants, sir, Sandila and Devar?
Our present capacity utilization is 66% of technical and more than 100% of formulation. If you combine together the overall capacity, it is almost about 80%.
Okay. So at the current revenue we can generate from these two plants, leaving aside the new capacity that we are doing at the Sandila.
Yeah.
How much we can generate the
What we
revenue?
are doing, it will add to our overall capacity further.
So we are adding the intermediate, so that gets internally consumed. That's what you are saying?
Yeah, we are adding. We have already added one intermediate, and one more intermediate would be increasing the capacity, and two more active ingredients we will be adding this year.
That is fine, sir. So what I'm asking is...
Sorry to interrupt, Mr. Rajesh. May we request that you return to the question queue for the follow-up
Okay.
question?
Yeah, thank you.
Thank you. The next question is from the line of Ayush Rathi from Aditya Birla Money. Please go ahead.
Hello, am I audible?
Yes.
Yes. So I had one basic question. So you mentioned that you're guiding that in FY25 we'll be achieving 15 to 20% year-on-year growth on the top line front, right?
Yes.
So this is, are we accounting for a price increase also, or this is only volume-led growth?
This is mostly based on the volumes only, sir. Because price increase is very difficult to understand the market situation. But what we feel that we are increasing our capacity, we are bettering our capacity utilization, so margins would be slightly better.
All right. So if we are forecasting by quarter 3 or quarter 4, if there is a substantial price increase or probably 3 to 4% price increase, then the growth on the top line front would be more, right? Above 15 to 20%.
Certainly.
All right. And one question on the margin front. One participant has already asked that 22% to 23% margins on the EBITDA front. So I just wanted to ask if there's a substantial price increase, probably in FY26, are we able to go back to that margins?
Sir, if there is an opportunity, we would like to do that. But the overall market situation, what happens now, the overall agrochemical industry, the prices have been remaining slightly subdued. So taking big price increases is slightly difficult in the present scenario.
All right. Got it, sir. Thanks a lot. That's all from my side. And all the best.
Thank you.
Thank you. The next question is from the line of Karan Shah from GC Holdings LLP. Please go ahead.
Thank you for the opportunity. So just wanted to understand, would you be able to quantify the volume growth in first quarter?
Our volume has increased by 26% this quarter.
Okay. And sir, like you alluded that we might achieve a 15 to 20% growth for FY25. So are we anticipating that our second half will be equal or stronger to our first half, stronger than our first half, because generally our second half has been weaker?
It will be definitely far better than FY24 numbers. Second half will be far better since last year export has declined very, very sharply. So now we are seeing in international market volumes are picking up.
Okay. And sir, would you be able to share the percent of revenue from the new molecules?
From the new molecules, we have achieved around 40 crore this quarter. It will be around 18 to 19%.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Meghna from Mount Intra Finance Private Limited. Please go ahead.
Hello. Hi. Good afternoon, sir. So I just basically wanted to know, what has been the July season for the herbicides? Has it been soft, or what has been the circumstances in July? Because we have expected unexpected rain in July. So what are the things about that?
July has been very good. It turnover as compared to YOY, it has been very good.
For the herbicides also?
Yes.
And sir, also one more question on the domestic market. So what are the guidance and growth about the domestic? What are we expecting in the domestic segment in FY25?
Domestic market, madam, we expect to grow around 8 to 10% every year. And from our company perspective point of view also, we are seeing increase in the domestic market because some of the products what we have introduced in the recent past have been slightly domestic oriented. So the domestic sale and our formulation sales have increased from that perspective.
Okay. Thank you. Thank you so much, sir.
Thank you.
And all the best.
Thank you. Ladies and gentlemen, just a reminder, anyone who wishes to ask a question may press star and 1 on the touchtone telephone now. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
So, this regarding the Hamirpur plant, what are the reasons that we can't expect any revenues during the?
Sir, from Hamirpur plant, because the plants are still under construction and we would be expecting them to be commissioned in the last quarter of this financial year. And the formulation we just started on a very small note in March. So this quarter we could not formulate too much, not lot of material because we are expecting some CIB registration still to come. So we feel probably next year it will contribute significantly to our revenues.
So whatever that was commissioned in March was the formulation plant, not the technicals.
No, yes. It was formulation plant.
Okay. Why there is delay for this technical, sir?
The technical plant actually, the overall situation was not that congenial for selecting the product properly because what happens, the prices were fluctuating so much in the international market. Okay. And so we, one of the intermediate we started, but then that intermediate price came down. So we just working on the technology development of that intermediate further. And now we have already zeroed on 2 molecules. The work of that molecules are going on in the plant. So that will be there in the, I think, third quarter, we should be able to commission those plants.
So that means as on today, other than the formulation plant, there is no technicals plant there?
Yeah, not yet. They are under construction, yes.
Okay. So now for these products, one, you said you have already zeroed down onto 2 products. Is the registration of these products have been completed?
The registration of these 2 products, one doesn't need any registration because it doesn't come directly under insecticides. And the other one, the registration is also on. It has already been submitted long back and we expect the registration to be received by next month.
Okay. Now, sir, you have mentioned this, the capex funding would be from the internal accrual. So this 110 crores is what required for the current year. That you would fund from the internal accruals. Is that understanding is correct?
Yes, exactly.
Achha. Okay, sir. Okay. Thank you very much and all the best.
Thank you.
Thank you. Ladies and gentlemen, just a reminder, Anyone who wishes to ask a question may press star and one on the touchtone telephone now. The next question is from the line of Manish Jain, an individual investor. Please go ahead.
Thank you for the opportunity, sir. Sir, at the current prices, what is our capacity utilization at present?
For technical plant, it is 66%, and for formulation plant, it was around 100% during this quarter.
Okay. So, sir, if the demand increases for the formulation, then what is the way out for us?
We will commission this increased capacity of formulation plant within this month or next month.
So, after that increase in capacity, how much more turnover can we generate, sir?
The formulation, we will be increasing capacity by 30 to 40%. So, formulation capacity turnover can be increased by similar amount.
So, sir, for this year, we are given a guidance of 15 to 20%. So, this is for this year. For the next year, what kind of you see? What kind of a roadmap you can give?
For next year also, we are expecting sales growth of 15 to 20%.
But, sir, we have the capacity for that?
Yes. Technical plant have enough capacity, and formulation will also capacity will be expanded. So we will have enough capacity for the growth.
Sir, we have cash in hand of 140 crores. So for all the capex, we will be generating internal accruals for this year also. So I think even after the capex also, we will be cash surplus company.
Yes, we will be cash surplus company.
In the foreseeable future for the next 1 or 2 years, right?
Yes.
Okay, sir. Thanks a lot thank you.
Thank you.
Thank you. The next question is from the line of Aditya from Sovilo Investment Management. Please go ahead.
Good afternoon, and thank you for taking my question. My question was more on the lines of inventory. Inventory days has been going up. I just wanted to understand if it is because of the pricing pressure in the global markets. Is that the reason, or is there any other reason?
Our inventory level in June is number of days has declined significantly as compared to FY24 numbers. In absolute term, it has increased by 3 to 4 crore, but our turnover in this quarter has already increased by 9%. So inventory days, they are on decline from this quarter.
Okay, and so I was just trying to understand the build-up in inventory days. Earlier, it used to be under 100, but now, last couple of years, it's gone up, right, significantly. So is that related to the global China pressure, or is there any other reason why?
Actually, due to less export, our turnover has declined sharply in Q4 and last year Q3. That is why inventory turnover days has increased. Otherwise, in absolute number, we have not increased inventory much, but turnover has declined. So the inventory turnover days has gone up.
And the reduction in exports was because of?
Because of the higher channel inventory and adverse weather in some geographies.
Okay. Thank you.
Thank you. Ladies and gentlemen, just a reminder, anyone who wishes to ask a question may press star and one on the touchtone telephone. Just a reminder, anyone who wishes to ask a question may press star and one on the touchtone telephone. The next question is from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes.
I just skipped a part on the EBITDA front. Are we expecting an EBITDA of 17 to 18% for FY25 and for FY26?
Yes. full year, it will be difficult to give EBITDA guidance. From third quarter onward, we are expecting that we will be around 18 to 20% EBITDA margin.
From quarter 3 of FY25. Okay, right.
Okay.
So for FY26, your full year EBITDA should be in the same range, 18 to 20% range, right?
Yes, what we are projecting EBITDA of similar range in next year.
All right. Okay, sir. Thank you. All the best.
Thank you.
Thank you. That was the last question. I would now like to hand the conference over to the management for the closing remarks.
Thank you very much for sparing your valuable time for participating in this conference call. For any other further queries or clarifications, please do get in touch with our investor relations team. We will certainly come back to you on that. Thank you very much.
On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.